Welcome to Chart Detective, where we let the chart speak for themselves. In today's presentation, we'll be looking at ASP Isotopes, which is a pharmaceutical company which is also involved in nuclear energy. So this company IPO'd not too long ago, so we'll take a deep dive in the chart to see how the stock has performed since it IPO'd and what do we expect to happen in the near future. So this is the ticker symbol for the company, ASPI, and the company IPO'd late 2022, and from there the bears took over and crashed the price by 90% all the way to 33 cents. So the stock went from $3.50 to 33 cents. And right there we see the formation of a doji candle, a long-legged doji, which is normally a sign of reversal if it's found in a downtrend. This is exactly what we see here, right? The doji in the downtrend, and what happened after that? The bulls took over and moved the price up by as much as 440%. There we see formation of another candle pattern. This time we have a dark cloud cover. The first candle on the left being green is followed by a red candle, a bearish candle that got a little bit higher at the opening but closed down within at least 50% of the previous green candle. And what happened after that? The price went down because that dark cloud cover was a signal for the market to go down, and the stock went down by as much as 50%. And there we encounter a hammer, which is a sign of reversal. So the downtrend will be reversing as a result of that hammer. That's exactly what we see. And the stock went up by as much as 440% again. There we have a double top, and we have a bearish candle. It's not bearish engulfing, but the bearish candle is large enough to cover the body of the previous candle. And what happened after that? Price went down by about 65%. And we have another doji formation here, which symbolizes that the price probably will be going higher after that, just like we had seen previously. And this doji is located as a support, so there is strong indication that price would go up, and this is exactly what we see. Price go up to a new all-time high. By as much as 370%. So this stock has been quite volatile. So let's look to see what else we can see. When we look at the chart, we see there is formation of what is referred to as an inverse head and shoulder pattern. Whenever we have a head and shoulder pattern, we have to ask for the price target. To find the price target, we measure from the level of the head all the way to the level of the neckline, and we extrapolate that, and we find the target price, which would be at about $10. And this is exactly what we see that the price did by almost the end of 2024. Price went up to almost $10 as predicted by the inverse head and shoulder pattern. Now let's look to see what the stock has been doing since 2025. The stock went up initially, and last week the stock crashed by as much as 23% and stop at about $5. Why? Because we have support at that level. Technical is respected. And as of Friday, January 31st, stock closed at $5.75. And for the month of January, the stock was up by as much as 22%. Let's take a look of what had happened in the last trading week of January 2025. On Friday, January 24th, 2025, we see formation of this candle here, which is a spinning top, which is a warning that the stock price could be going down if this pattern, if this candlestick is found at the top of an uptrend. This is exactly what we have here. We have an uptrend and we have a spinning top formation. That's a warning that price could be going down, and this is exactly what we see happen on the next trading day. Price gap down. And leading to the formation of this candle over here. Next, we see formation of this candle here, which is a hammer, which is a bullish candle if it's found in a downtrend. So price had gap down by as much as 23%. And after formation of this pattern here, of this hammer, we expect price to go up. This is exactly what we see. So let's check to see how we expect the stock to perform in the coming months. So let's see, this is our price target. We expect the price to go up to at least $9, which is about 65% from the current price right now. So let's look at the probability. Let's see what may happen, how the price may reach that level and beyond that. So we expect the bears to drag the price down where we have support. Price would stop at this level right at $5, and the bulls will step in to bring the price higher to about $7 where we had the previous high of for this here. So the bear would stop the price at that level. Because we have resistance, and the bears would step in and bring the price down back to about $6.20 where we have support, and the bulls will step in to bring the price high to about $9, which was the previous all-time high where we have resistance. And we expect price to move higher beyond that level.